Thank you, Mayor, members of the council. I'm pleased to be here. A couple of you saw me on a very, very different kind of day in March, a nasty day, talking about the housing market, and I think that precipitated a request to have me come talk to the full council. I do this often. I've done this across the country for councils in helping them, and I am familiar with what all of you go through. Why so many apartments? Why so many build-to-rents? Why is housing unaffordable? Why do we have so much warehouse space? Why can't developers just give us Kierland Commons, please? That's all we want.
We are retitling warehouse space to employment centers, so just to let you know.
Well, thank you for that, Mayor.
All right.
Semantics, it does make a difference.
Yes.
So a couple of things. You see what you see as council members and as a city from developers for reasons. And what I wanted to try and do is give a framework or a foundation for maybe why you're seeing what you're seeing and why it is difficult sometimes for you to realize the visions that you have as council members. I start with what I put up here on the screen, and I'll read it. Real estate's a service to society. It is not just a financial instrument. It exists at this interesting place, is the nexus between business and society. And you sit right at that nexus. And that's one of the things that makes your job so difficult sometimes. It provides a service to what I call actionable demand. We want lots of things. We hope for lots of things. We can't always get them. And the inability to get it is that inactionable demand. So it requires this, the business requires lots of capital. So financing both debt and equity and private property rights are three really big components to this market condition. And also realizing that, Goodyear, like every city or town in the metropolitan area, is not alone. It's part of a region. And the things that we talk about are things that affect the entire region. They happen to affect you in specific ways because of where you are located in that region, because of resources you may have that may be unique, because of characteristics that you have that make it attractive or unattractive, depending on the demand. So with that in mind, here's basic story of the market today. We're familiar with what happened with housing prices. So this is from the Federal Reserve. You see to the far right with that dashed line around it, that was 2020 until very recently, the spike in median house prices. We're all familiar with it. We know what happened. A lot of people said, well, it's because it was cheap money. It was nothing but cheap money. They gave us cheap money, really. And that's what happened. When you actually look at the Fed rate, you realize that it wasn't just cheap money that was doing this. It was a number of other factors that were causing this rapid home price increase to occur. And I'm going to point to a couple statistics here. February of 2020, just before the pandemic, median house price in Metro Phoenix was $295,000. The months of inventory of existing homes was 2.14, which was very low. A healthy market needs about 6 months of housing inventory in order for it to be fluid. And that fluidity is one of the things that helps keep prices down. It also is a thing in a growing market like we have and like you have as a community where you have to have it in order to have people who are filling the jobs the employment you're attracting is creating to live. If you don't have it, they get no place to live, you got a problem. So we need a strong inventory. June 2022, 17 months later, was the peak, with $475,000 was the median price of a home, 61% increase in 17 months. And the month's inventory was at 2.33, so it was slightly higher. I circle here, the lowest inventory was March, just before this peak, where we had 0.89 months of inventory. That's like nothing. That's really almost nothing available. So one of the things that happened to us is we had not enough inventory. And I'll get into a couple reasons why and a couple of other factors here. But the month supply, so I just looked at this for September, and it's up just a tiny, tiny bit. But even still 2.39. So we haven't had really much change in existing home inventory. And when you look at total inventory, although total inventory is up slightly from a year ago, it's really not significant enough to make a change in house prices. So what I thought was going to happen is I took that median price chart and I laid a trend line across it. And I said, okay, I think what's probably going to happen here is we had this spike because of the pandemic and there was a number of other factors in here. We're probably going to fall back down to the trend line. And so I plot the trend line. And then I said, okay, let's look at it from the standpoint of both long-term trend and more immediate trend. So 2011, right after the recession ended, all the way back to 1995, what were the trend lines? And trying to figure out where it might fall back to what trend. What I was surprised to find, I was wrong. And what has begun to happen again is that median prices started to increase. Now, it fell for several months, as you can see in this chart here. So this is average and median sales price of existing homes. And you can see where it started to fall and then it's come back up again. And we're almost about where we were. And when I looked at median price for September, it's starting to increase above where we were. Couple things to think about. Here's average earnings to home price index. And this takes us all the way back to 2009. And that red line on the bottom is average earnings. And that blue line is the median price of a home in Metro Phoenix. And you see how we've been diverging so significantly from wages with home prices. That causes an affordability issue for us, and that affordability issue begins to affect a number of things, including home building. New home sales by price in the Metro Phoenix area, you see that there's only 20% of the homes that are below $500,000. And only 23% of those homes are below the median price of a home in Metro Phoenix. That means that Phoenix metro area, only about 18.3% of the population can afford a median price home. When we look at existing inventories below median sales price, this was Maricopa Pinal total listings. The listings at or below median price was 38%. Listings below 350, there was only 2,400, and below 300,000 was only 1,400 in all of Metro Phoenix. So this chart shows you, this is the US supply versus price, but the chart here looks very much like it does for Metro Phoenix. And so you see price change, you see inventories, and they correlate to each other. Everybody knows that basic supply and demand. Well, why is that? Well, we came out of the recession and we underbuilt in this marketplace for almost 11 years. And that set up the conditions we have now. And a lot of what is happening is the result of what transpired during the Great Recession. And what happened with the pandemic just set in motion some things that accelerated so much quicker than the market could absorb. Single family and multi-family building permits. So you look at this chart here, and this is fairly recent. This was through the end of August. And you see that year-over-year change in total single-family permits is down 27%. And multifamily, although up slightly, 4.3%, overall, we're below where we were last year with building permits. So we're not helping the market. We're not adding the supply, which when you look at the correlation between supply and demand, when we started to add more supply, we started to see a moderation in price. And so this is not helping. It's not helping because we can't build them. Right, so capital markets, I'll get to that in a second. New and existing home sales. When you begin looking at trying to add inventory now, not because of the fact that we've got people moving out of their existing homes, but because we have home builders building more homes to add to the market, you see that we are going to struggle to keep up with the overall market demand we have in metropolitan Phoenix. Why? Because we're one of the top job markets in the country. So lots of demand, lots of people want to be here. Employers want to be here for a lot of reasons that you all know, but we can't add the supply fast enough. The other thing, and this I think bodes well for the city of Goodyear, is we do have a significantly shifting development pattern in metropolitan Phoenix. It was the 1980s, the 1970s, 1980s, 90s, beginning of the 2000s. There was a big push where most of like 65% of the new homes development was in the East Valley. And that has shifted. It shifted significantly. And you see on this chart here, single-family permits by region. And you see how the East Valley has dropped off. Pinal County has dropped off. The West Valley had picked up substantially. So there's a shift in the development patterns. When you look at where growth is going to be going, this map shows you with that magenta color where developable land is available in the metropolitan Phoenix area. And the West Valley is going to garner 52% of that growth. So it's coming your way, good or bad. It is going to change the dynamics of the entire metropolitan Phoenix area. We're familiar with what's going on with water, and we'll talk about that in a few minutes. Let's look at multifamily for a moment. Average asking rent per unit and vacancy rates. So quarter 1, 2022, quarter 4, 2022, quarter 1, 2023, you see where we started to moderate the price. And the reason for that is because we added so many more multifamily units to the market in that time period between 2018 and 2022. So we had an acceleration in development of multifamily units, and that started to dampen down rents. This shows new construction versus absorption. And you see in 2022, new construction far exceeded absorption. Well, capital markets have not helped us because it's slowed all of that down again. When you look at multifamily permits in the metro area, 1999 to 2018, we averaged about 6,000 permits per year in the metro area. Between 2019 and 2022, that jumped to 14,000, almost 600. So we had this big push to add more units. That was good. That's exactly what we needed to have happen. That frustrates sometimes cities because there's a big pushback against multifamily, against increasing density. And it's increasing density and it's having those units that's important. The question is, why can't we have more homes? Why can't we have more single family? Back to the affordability issue. That's one of the reasons why. Other parts of this market are doing extremely well. Why so many warehouses? Just go look at the Inland Empire, right? They have about a 1%, 2% vacancy, and their rates, rental rates are 4 times what they are here, 5 times. So we are a better alternative than some of the California markets. And we're right at the edge of where a truck can take their load off the docks and be on the road and not have to stop and sleep. So we're also in a place where we can distribute goods north, south, east, and west from here. So it's a very strong industrial market. We've also increased the amount of manufacturing and advanced manufacturing in the marketplace, and the semiconductor industry is helping substantially, and I think that's going to continue now that it's a national defense issue, it's a security issue. All of the push behind increasing the amount of semiconductor development in the United States is going to inure to our benefit. And again, it's just going to increase pressure on the need for housing to house all of these workers. Past 2 years, demand outpaced construction, led to historically low vacancy rates. This will shift in 2023. There's a lot of inventory coming on the market. It's probably going to stabilize the market, but it's going to remain historically high occupancy rates for the industrial market, just like it has for the multifamily market. Tremendous amount. 2022 record net absorption of 27 million square feet. There was 4 million square feet in the first quarter of 2023 alone. Just tremendous amount. And the reason for that is because of our growth. Economic expansion has been tremendous. This shows how you're going to see this begin to moderate space demand versus deliveries. Office. Here's the good news. We're not Chicago. We're not San Francisco. We're not New York. The office market does have a problem. We've never been an office market. It really doesn't have the effect on our marketplace that it does in other marketplaces. But, you know, it does have a spillover effect because the capital markets view this and it puts constraint on new investments in a lot of different areas. The question that hangs out there right now, and I'm a NAIOP national fellow, and I'm on ICSE's North American Research Board. And I was at meetings in DC and Atlanta over the last couple of weeks for both organizations, and probably 75% of the conversation had to do with this, the office market and back to the office and what's going to happen with interest rates. The only two things the groups are talking about, really. And we don't know. This is an interesting chart. It came from a survey of those, 60% of those surveyed preferred hybrid, 33% preferred remote. There was a 53% decline in the preference for on-site work for those in offices that can work remotely. So this is a persistent problem, and employers haven't figured it out yet. But what it does have is a tremendous effect on our vacancy rates. New construction, retail has been fantastic for the last 7 or 8 years. And when you look at what's happened with retail over the last 7 years or so, I think you're going to see the same thing happening with office. It's going to take that long to sort out the office market. But retail is in very good shape because it's following rooftops. And as you see by this, we didn't add that much. We stopped building a lot of retail. And by not building a lot of retail, the housing demand caught up with it. And that's helped vacancy rates. It's helped push up asking rates for rents for both of them. One of the things that has happened is the interest rates have gone up so substantially, so quickly, and that has an effect on the capital markets. And what it does is it causes cap rates, and cap rates are capitalization rates, and that's how one of the methods you use for valuing property. And the higher the cap rate goes, the lower the value of property goes. And as this has gone up because of interest rates, we've seen valuation of all commercial sectors decrease. And when they decrease, it makes it harder to get new projects financed. The other issue that this relates to is the exposure that banks have. And the majority of commercial loans reside within community banks, not the large national banks. And that's one of the big concerns. Why do you care about that? You care about it is because this business requires a lot of capital. And that capital is going to come from equity or debt sources. And when equity is pricing things much higher, cap rates, and debt becomes unavailable because it's under a lot of constraint, it's much more difficult to underwrite new projects. And that's exactly what's happening in the market now. So as much as we would like things to happen, it's more difficult and more difficult and more difficult to get them financed. This is an example that CMBS is collateralized mortgage-backed securities. It's one of the primary ways that commercial space is financed. And when you look at this, you see how much the number of new loans in the CMBS market has dropped off so substantially in the last year. So it's almost nanoscent at this point. CMBS origination volumes, it hasn't been this low since 2009. And that tells you why it's hard to get some of these projects financed. So rate hikes, fears of recession, makes adding new space to the market challenging. Rate hikes also have led to decline of property values. Investors and lenders are being more cautious. It's difficult to assess risk, which could be very problematic if rates continue to increase, or there's a concern that they may continue to increase. Industrial is going to continue to do extremely well. Commercial lending, We're just not sure what's going to happen with it. I think you're going to find a lot of non-bank lenders stepping into the market to try and solve problems. My basic forecast here is COVID impacts continue to affect the market. Employment growth continues to drive population. Industrial development is very strong. Still hard to add housing. Home prices will continue to rise. Home building becomes very difficult because of the cost of materials, labor, schedules, and the fact that people can't get loans like they would. Retail is going to follow the rooftops. Multifamily underwriting slows down. It's just going to make it worse for rents. And like I said, we're not Chicago. So just as supply is increasing, softening prices, credit slows, new growth makes things worse. Affordability and homelessness, big problem in our marketplace. There's a conflict with growth pattern in water, and capital markets slow all underwriting regardless of the product type. So that's my thumbnail market overview, as close to 15 minutes as I could get. How'd I do? Yeah, that's my brief update. It's hard to do this and be brief.
I have a question. This might be stupid, but I'm going to ask it anyway. What does a war, not knowing where we're going with this, and everybody keeps saying it's going to be longer and shorter, what does that have to do with this? Can that make this worse? Another war, I should say.
Yeah, so the answer to that is absolutely yes, for a couple of reasons. One is capital markets don't like uncertainty. They prefer certainty. This is an uncertain condition. It takes resources and redeploys them into other places. It requires the federal government to spend more money, and that increases deficit. That also puts upward pressure on Fed rates sometimes. So I would say it's not a stupid question. I think that it's a great uncertainty because we don't know what happens to the global markets.
So it kind of depends on how long we're in this war, which
Depends.
we don't have any idea.
No, we have no idea.
No.
And if we had an idea, there wouldn't be uncertainty.
Right.
And because we don't know, and we don't know whether this escalates, de-escalates, how it expands, you've got all of this great uncertainty. And like I said, capital markets, investment markets do not like that.
Thank you.
Yeah, go ahead.
Thank you very much. This was very, very informative. When I was going through it this weekend and stuff, I found it very interesting, especially the 18% affordability, and most of our major hubs in the state of Arizona are not affordable. So that was a concern for a whole nother generation of people, like my kids that'll be graduating. There's not going to be homes that they're going to be able to afford. So it's a big concern. So I would like to see if we could put, if it's okay, is this something we can put on our website, easy access, so our citizens can see this? Because this is great material to educate people.
As far as I'm concerned, it's yours.
Oh, thank you. And then I have two questions. You hear a lot about a lot of the prices are being forced up with not owner occupied, while investors are buying like lots of houses and Airbnb them or renting them. And do you consider this a bubble, or is it just going to stay elevated?
I think it's going to stay elevated. And the reason for that are the things that we talked about. We have this other thing that economists call the lock-in effect. And you've got 61%, 62% of all mortgages are below 4%. 80-some% of all mortgages right now, it's like 82 or 83% of mortgages are below 5%. And so the more that mortgage interest rates rise, the greater that lock-in effect becomes, the harder it is for that existing inventory to turn over. And you increasingly get this have and have not, right? So we're going to bifurcate the marketplace, and people have to have someplace to live. There's just no doubt about it. If you're going to have the economic expansion that we realize here, people have to live somewhere. And if you're not moving out of your house, if home builders can't build as fast for a variety of reasons, and people can't get mortgages, what do? You have to have the rental housing. Mm-hmm. And I think, I'm looking at the MAG data, there's about 26% of the housing stock in Metro Phoenix, which is either second homes or institutional-owned homes. So it's roughly a quarter of the market. And I don't know, I have to look at it, but I don't know what percentage of that is second homes. Mm-hmm. But we have a very dynamic housing market because we have retirement housing, we have vacation housing, we have second homes, We have primary homes. It's a more complex market than it was even 20 years ago.
Thank you.
Go ahead.
Thank you, Mark. I feel like we just got a crash college course on finance, and it's very interesting, and certainly having your narrative to go with the statistics was very helpful. And it's also helpful for us to get a 360 worldview of this, of the situation, because yes, we do hear a lot about multifamily and thing, and I think you put it very succinctly. People have to have a place to live. And I mean, it just is that simple. I did have a question about investors buying up homes, which Sherry asked. Are we still seeing a large in-migration from other states to Arizona, and do you expect that to continue?
I think as long as our employment growth continues, right? As long as Wendy's doing her job over here, the answer is going to be yes. Because the population is going to seek the job opportunities. I mean, population is the result of economic expansion. And we're going to continue to see that growth occurring. We're in a very good place for a variety of reasons. Now, we have our resiliency issues. We're all familiar with the conversation around water, et cetera. I can't tell you how many phone calls I've gotten from Wall Street Journal and New York Times and places like that. No, we're not running out of water, but it is a critical resource, and it's something that we have to worry about. And so long as there isn't the war, as long as there isn't that black swan event, as economists call it, and we continue to be who we are, we're going to see that pressure to house these employees. And for the reasons I mentioned, it's not easy to do. Let me digress for 1 second. Phoenix is an adolescent metropolitan area. When you look at our peer cities, we are much, much, much younger than all those other cities. And so you, like your own city, you haven't realized your full form yet. In metropolitan Phoenix has not realized its full form, and as we mature, we're going to have to densify. There's just no two ways about it. In order for us to maintain a quality of life, we're going to have to densify, and that bothers some people. I realize that. But frankly, we're better off with a wide variety of housing choices than we are with just one type, single-family detached homes. And these are lifestyle issues. These are where you are in your life cycle issues. These are choice issues. These are opportunity issues for people. And so I think the entire metropolitan region is best served to have a broader array of housing types that are available for those people that are coming here.
I would say it's not your father's apartments anymore, for
No.
sure. It has definitely evolved and become like resort living. Well, my next question is part commentary and part question, but we have the state legislature who's looking at cities and housing and affordable, and they tend to look at us with a broad brush. In Goodyear, we felt like we've done certainly our fair share of developing areas for multifamily, integrating it into our city. Maybe, much more than some other cities who are really trying to resist it. But I'm curious if you have any interaction educating the legislators about the current housing situations and things. They just want to legislate everything for us, and as if we're all doing or not doing the same thing. And in Goodyear, I think we have tried to integrate a huge inventory and diversity of housing.
So I think the governor, when she first came out, having been elected, and talked about the affordability issue, I think that was very good. I know that firsthand that there's a desire to develop a state housing policy. We lack a regional housing policy. We need that. And that really should emanate from the top down. As I said, although every city is part of a bigger region, the region is part of the state. And these issues that we have here are magnified in some of the outlying rural areas in terms of affordability. It's much more difficult. So the simple answer is yes, conversations. It's hard to think about what, from the legislative perspective can be done without having too heavy a hand in removing some of your right to govern your own place. The fear is that you do have, I'll call them economic free riders. You have cities and towns that go, nope, I don't care. They want the benefit of additional sales tax revenue that comes from, bed tax or from hospitality, but they don't want to employ the people they don't want to house the people that are employed in those places. I think everybody has to participate equally. Everybody has to participate in trying to solve the homelessness problem. It's real, and it affects all of us, whether we see it or not.
Great, thank you. And I have one last question, if I might. The Inland Empire, you said was a 1% vacancy rate, which is tremendous. I know that we have certain areas because of Luke Air Force Base, our airports and things that we knew that would be industrial, but I don't know that we knew it would be to the extent that it is, that the Inland Empire is migrating here.
It
And
is.
what do you forecast for that? Is that do you see that will continue? I mean, it's all over the valley. It's just not the West Valley. I mean, it's everywhere you go.
So the opening of the South Mountain 202 loop, I think, also helped distribute some of that demand, which was a good thing. But I don't think you're going to see that waning. It's interesting because warehousing. I was just reading an article the other day. You're talking about warehousing spaces that are 80-foot clear heights because of the technology that's supporting racking systems. This is evolving, and some of it's very, very sophisticated. It's not just cheap throw up the walls kind of stuff. Laser leveled floors, high power demands, things of that nature. It is expensive. And one of the reasons it's here is because we have much more land available. Mm-hmm. It's much less expensive to develop here, and it's easier to develop here. But we're not as mature a market as the Inland Empire either. And I think you're wise to look out into the future to see what this might mean to you ultimately at build out.
Good question. Good comment. Thank you.
Anybody over here? Go ahead, Warren.
Just a comment, just piggybacking on Councilwoman Keno's topic. So it looks like, at least your forecast here, it looks like everything's going to slow down, but maybe we might have some benefits because we have a lot of population already that are underserved for retail. So you said retail might continue to be slow, but continue to come forward. So just commenting on that observation, which is a good thing, I think, for us, that we have created a lot of rooftops, and hopefully we can now continue to get some more retail.
I think you're right, and as the growth of the city continues and it matures, you have not been over retailed here.
No.
And so I think you're going to see that demand for retail space. And the question is what kind of retail and
Yeah.
where. But I would agree with you. You're going to continue to see demand for it.
Yeah, and making sure that we have the space for that potential
Yes.
retail growth, wherever that might end up being, where that demand is as well. And then yeah, to Councilwoman Keno's point as well, I feel like Goodyear's done a really good job of creating a lot of density here. I know we have lots of units that could be built today, and I feel that maybe the East Valley or other cities haven't really been carrying their load of the demand that might need to be created out there for all these positions, but all these type of housing options. But I can think of a few cities that I think you're hinting at, where they want the resorts and they don't want the people that work there. So near the resorts or near the places that are tourism type centers.
Some cities are much more resistant to increasing density than others.
Yeah.
How's that?
And to her point as well, I mean, I think our legislators, they'd like to paint a broad brush with that as well. I think they like to punish all as opposed to the ones that are limiting that demand. So so we'll see. I mean, I know the Fed is a big driver of this. They're really trying to get the inflation rate down to at least 2%. So we'll see how we'll see what they do next year here. I'm really hoping that they start reducing interest rates, but it really depends what the numbers, what they see.
Yeah.
With the numbers and everything, but
There's about 40-some percent of the CPI is either rent or the equivalent of rent. And so as this has persisted, it has made it much more difficult to bring the CPI down.
Yeah.
If you strip out those two things, you look at the fact the Fed's been very successful in bringing it down, but rent and the rent equivalency factor in the CPI has kept it higher than I think it would be
yeah.
if we had a better market dynamic.
Yeah, I mean, I know the consumer is the biggest 80% of the GDP for our market as well. So we keep people keeps buying things, and that keeps also throwing off the Fed's numbers. And the employment rate is so low because we're doing such a good job bringing more businesses here, or just across the country. So yeah, so I'm hoping when the war, the uncertainty, and I think the markets don't really like that as well. But we'll see how. Hopefully the Feds will react and start reducing, and that'll hopefully free up some of that cash flow, like you're saying as well. But yeah, no, I appreciate it. Yeah, it sounds like we're looking for a slowdown in housing coming up here, but I'm glad we're bringing more jobs, and hopefully we get some better jobs out here in the West Valley. So thank you.
Councilman Stipp?
Thank you, Mayor. Am I close enough for this? Okay. Never had an issue. Thank you very much for the presentation. I attended a very informal presentation last week on the timeline issue that you've been talking about with regard to not only the interest rates, but what's happening with the market and the ability to invest, et cetera. And it, again, very informal. They mention a timeline in the neighborhood of 2 to 3 year kind of, I'm going to say slowdown. I'm not going to say stoppage, but it certainly isn't going to be what we've seen. Does that track with about where you're estimating?
We would use the term softening.
Softening, thank
How's
you,
that?
yeah.
Right, it's a little kinder. Yeah, I mean, I do think that there's probably 18 months to 24 months of softening.
Yeah, okay. So, yeah, again, very informal, a bunch of people sitting around, but I think I was just trying to check that. The other thing that was mentioned in this discussion was they were using the term retail. Retail seems to be okay. Retail seems to be okay. And then this individual who works in the retail space happened to mention that what's driving retail are the quick serve restaurants. And that all gets lumped together, yeah. And I was all excited about, oh, retail, that's awesome. And then he mentioned QSRs. So what's your thought on what is the real retail, storefront versus QSR, that kind of thing?
Yeah, I don't think it's the sole reason that retail has done well. I think retail has done well because you stopped building lots of it, and you took some of it out of the marketplace that shouldn't have been there to begin with. But retail, like other segments, has got this hybridization that's going on. It's not a singular thing anymore. And so food and beverage is a big part of all retail offerings. But consumerism is strong, as Councilman Hampton had pointed out. People continue to buy stuff, and that's surprising economists to some degree. But you also see the hybridization of the online world with the bricks and mortar world. And that has continued, and one of the reasons why we've got the demand for warehouse space is because this segment of the market has been very strong. So I wouldn't say it's driven solely by the QSR, but it's obviously an important part of it because it is part of the food and beverage component, which has been very strong for retail.
Okay. And you mentioned during a couple of your answers here that we have room for retail expansion here in the city.
I've not.
No, go right ahead.
Yeah,
I'm trying not to put words in your
No,
mouth.
no, as
so-
I was saying, I haven't studied your market specifically, but I think given where you are, what I know about it in your maturation is you probably are underserved in retail and could benefit from additional. Now, what does that mean? Does it mean let's build a new mall? Retail has done well because it has been very much in line with housing demand. And I think as long as you keep that in line, aligned with housing demand and focus on those lifestyle-related components, which includes grocery. Grocery stores follow rooftops. And then when you have the grocery store, you also have some of the other uses that tend to follow, and some of it is the QSR. You're going to see that kind of growth persist.
That's I'm going to say a great segue to my next question, which was really about what's going on in the food industry itself. We're, with the merger of Kroger, Safeway, Albertsons, et cetera, we're down to 3 grocers. We're down to that, Kroger now, Walmart, and Whole Foods, for the most part.
Target would argue.
Well, Target might argue with that, yeah, but we're talking about traditional grocery
Yeah.
store kinds of, traditional, where everybody generally goes to grocery shop, but you're down to almost 3. So when we start talking about anchoring strip malls, which is traditionally done with a grocery store, are we, I don't want to say rethink, but we have experienced that those small, I'm going to say corners that we thought 20 years ago, or it's probably 25 years ago now, that might be, a strip mall on every corner was kind of the theory, that we're looking at really very intentional grocery store here, which is followed by. Does that seem to be a natural?
I think it tempers that grocery war. I mean, listen, we had grocery stores. We had grocery wars. I mean, we're
Yeah.
getting groceries on every corner. I think a lot of that has diminished. There's a good and a bad about the consolidation. But I think they would more likely segment themselves by market type than they are going to compete against each other. So they don't want to cannibalize their stores.
Right, okay, yeah, that's kind of what I was thinking. Then the last question or series, I guess, is, we talk about industrial, and we've just recently put together a business park designation in our zoning ordinance, recognizing that it's not a traditional industrial user. And to the mayor's point, we're even try to change some of the terminology from industrial to, employment center. But when the big box goes up, it doesn't matter what you call it, it's getting a bad rap, whether for us it's a data center or a warehouse or an advanced manufacturing. Those 3 types of businesses all look the same. Any secrets to how maybe we?
It's, so my conversations at NAIOP, and for those of you who, that's an acronym, stands for National Association of Office and Industrial Properties. Like I said, I'm a national NAIOP fellow, and I was at the research meeting in DC. Hybridization is right now the focus, as opposed to singular uses and singular zones. And I think considering the fact that you may want to be able to mix uses where historically it was employment zone, industrial uses, done, that there is considerably more hybridization, meaning multiple types of uses within one particular project or one particular area.
So that business park then actually works into
Yeah.
the future for us.
Yeah, exactly. And I think recognizing the fact that they might include employment, but also housing. and other kinds of services that may just make it a broader opportunity than its singular use.
Interesting. Thank you very much for the information. This is much more in-depth and broader than what I saw from you earlier in the year. And this is, I think, hopefully been very informative for everybody. I know the updated information was super informative for me. So I greatly appreciate, Wynette and the staff, and obviously Wendy, and you taking the time to come out here tonight at my request. So thank you very much.
It's my pleasure.
Councilmember Campbell.
Thank you. Well, we enjoyed your presentation, and I have to agree with you about the Inland Empire. I'm very familiar with it. I have some friends who have moved their supply chain business from there to Goodyear because, number one, the land was cheaper. Number two, they could build it from scratch up cheaper than they could remodel what they had in California. We don't have the laws and the rules and the regulations that California has, and it's hampering them. But a lot of the businesses that are there will be there forever because they have been there forever. They're not going to just lock up and move because they have all their employees. But ever since I've been on council, we've always said, or most of us on council have said, we want people to live in Goodyear and we want them to work in Goodyear. We don't want them going on I-10 and going to Chandler or Mesa or downtown Phoenix, but that's before we got our distribution centers, our manufacturing and all that. So we've worked very hard to be proactive on that. And we do understand that all the other cities are running out of land. We're very fortunate because we're only 13% built out. And while Phoenix has done a beautiful job of their downtown area building multifamily up on buildings they already have and made everything walkable, I think we could do the same thing eventually here. And I think it's just really important that when we have residents that say they do not want any more multi-housing, we have to remind them that not everybody is in the same financial position that they are and that they need a place to live, as you said. And the only option open for them is a rental property. And if we can just ensure that those that have the rental property keep the property up and we stay on them so that it does not diminish the look of our city, I think we could be very successful. And people that come here love to be here. It takes them a little bit, but once they get used to it, if we could just get I-10 fixed now, that would be wonderful. But it's really interesting to see how the other cities are reacting to the multifamily housing. And while it appears to a lot of our residents that we have an abundance of it, we really don't. Because for 10 years we had none, and then all of a sudden they started springing up. But most of them had been approved years before. They could not get capital. They knew that they weren't going to be able to rent them if they built them. So it's all an economic thing that they have to look at all of this before they even break ground. So we're very fortunate to have what we have. I think we've done a good job except for one or two projects that I shall not mention that don't look very pretty. All the rest of them really look great and they really enhance our city. So thank you very much for coming, and it just solidified a lot of what we're doing, and we're just going to have to keep doing it. And we will get retail someday, and you're right, without the density, we're not going to get the retail.
Nope. You're right.
You good? Again, there's not a whole lot more to add except thank you for coming. I've got a couple things. I can appreciate the shortage of the housing. My mortgage is 3%. There's no way I'm going to buy something for an 8% mortgage. So I suspect that's part of the problem out there as well. Concerned about commercial rentals when they refinance some of their stuff. Are we going to see the bank taking some of these?
Mayor, I think there was lessons learned during the Great Recession that lenders don't want these things back. I think some of this is really going to depend on a couple factors, one of which is the uncertainty of the softening period.
Okay.
Lenders aren't equipped to own and manage assets. And what are they going to do with them? And they realize that sometimes by foreclosing and taking them back, they create self-fulfilling prophecies. So I think that there's more an interest in trying to work out loans today than there would have been back at the beginning of the Great Recession. Some of it's going to happen, but I think that there's more likely you're going to see things being worked out. The proverbial kick the can down the road, let's get the market healthier again, and then we won't have the problem.
I hope that's the case. The
Me
other
too. question
is I've had an opportunity to share some ideas with our governor when it comes to affordable housing, and I don't have the answer. I know growing up, to get your first house and get your first mortgage, your equity, you buy it, you sell it, you get your equity, you buy it, you sell it. My concern right now is affordable owner-occupied housing. How do we get there? I know the mortgage rates, I know the cost of supplies, but my concern is if all you have as option is rent, and some of the rents around here are very, very expensive for those that actually want at some point to buy a house, and they don't have that opportunity, then they will never be able to build the wealth that a lot of us on this room have done over the years by buying a house, sitting on it a while, selling it, sitting on it a while, selling it, et cetera. So just any thoughts on how we might address that issue?
Yeah, it's difficult, obviously, because, home builders are profit-seeking
I understand.
ventures, right? And, there's a couple of organizations like Trellis that are it's a not-for-profit that's in the business of developing affordable for-sale housing. And, there's capital that's available specifically for these kinds of uses. You have to be the kind of organization that knows how to access that capital, know how to manage that process. So, one of the thoughts is through partnership, through strategic partnership with organizations. Land is obviously an important part of that. The ability to get access to developable land so you can build affordable single-family housing on it is important. And so many times cities have access land, school districts, organizations, or parts of government. And so combining these things together in order to create some plausible, feasible solutions. Is it enough? I mean, are you able to build enough in volume that you really move the needle? It depends, but there are mechanisms, and I think one of those is looking for those strategic partnerships.
Well, I thank you for being here. It's very educational. I appreciate that. If we can get this thing so we can pull this up on our website for our residents, because if they can see all the concerns and where we're going and why we have what we have, I mean, all they got to do is go up 101 and they can see nothing but multifamily all up and down 101, as you start to head north. Because you're right, people have to live somewhere. But, this I think is very informative, and I appreciate you taking the time to come and talk to us about that.
My pleasure, Mayor, and I stand ready to come back and help however I possibly can.
Well, thank you
Thank
very
you all.
much.
Thank you.